Hello, I'm Ajabx from Ajabx Consult, a company dealing in real estate here in Uganda that helps buyers get financing from the banks, from money lenders to buy properties. And today I'm taking you through one of the methods of financing real estate in Uganda, which is mortgage financing. What is a mortgage? A mortgage is a type of a loan which is mainly given to property buyers or real estate buyers. And mortgage loans are always loans that have longer term period, for example 10 to 30 years, which helps people to pay up their mortgage. For example, you can use the same amount you're paying for rent to finance a mortgage. Mortgage is one of the best way to finance a property when you have got little or no money down. For example, here in Uganda, most banks would like you to put a little of like 20 to 30% down payment on any property you are intending to buy. That's like if for example a property is 100 million, they will ask you to put like 20 million. Then they will help you finance the other 80 million, which is 80% of the amount. Although there are other banks or financial institutions or money lenders that do 100% financing, whereby these money lenders or financial institutions which gives 100% financing have their criteria they take, or the appraisal they do on their clients whom they give these loans or mortgages. For example, one criteria they use is your credit history and your ability to pay back their money. Are you credible enough to pay back their money? If so, and you have been banking with them, you have a good credit history, that's good. They'll give you 100% loan. And a bank, for example, I know only the one bank in Uganda that does 100% mortgage financing is Stanbic Bank. Stanbic Bank does mortgage financing 100%. Then the other banks which do 20%, 80, which ask for like you put 30% or 20% down, like housing finance bank will ask you to put something down when you are buying a property. Housing finance bank, Centenary Bank, APSA, Cairo Bank, these are financial institutions that give out mortgages. And it's good to buy a property when you have put something down. That's like having money on a property. It will help you, or it will drive you to pay the other money that the money lender has given you. Because when you don't have money in a property you are intending to buy, you will not have morale to pay back. But when you put down a little bit of money, like 20%, 30% down, it will help you also to gain equity in a property. So why do you use a mortgage, or benefits of using a mortgage? Mortgage financing, you can use mortgage financing when you have no money or you have little money to buy a property or a home, whereby housing is a necessity to all. Everyone needs housing. You also need housing for your property, for your family. You need shelter. You have to put shelter on top of your family. because housing is a necessity need in life. So this is why I'm here telling you to use mortgage financing if you have no money to buy a property cash. Yeah, are you with me? So I advise you to go for mortgage financing if you are ready for it, because you have to pay those installments monthly up to the end of the loan term or the mortgage term. Then you own your property free and clear, because you can use that amount you're paying your landlord as rent, as monthly rent. Eh? You can buy a property which you afford, then pay in installments. Then the other thing is, when you are taking up a mortgage, the banks or the money lender gives you documents or the deeds to sign. Then other banks or financial institutions will give you something of a transfer form. Never sign a transfer form. This is when I advise you to use a lawyer or an experienced person to help you through, take you through all those deeds or those documents the bank has given you, or the money lender has given you, to be sure on what are you buying or what are you going in. Yes, be keen to this. Never sign a transfer form. It happened to someone. And the other thing is, when you buy a property on a mortgage, on mortgage basis, and in some way or the other you get financial hindrances or financial problems, you are unable to meet the mortgage obligations, the installment, you can sell that property which is subject to mortgages. We also help buyers. If you are there, you took up a loan on your property, the bank wants to take over your property, you can come to us. We shall help you. We shall help you get someone to take over the payments, and after he or she has paid the payments, you own both of you. You own the property, or you can go on with an agreement that you sell the equity or the amount you had paid to him, then he continues the payments. Never fail. And if you take up a mortgage, you get some problems, there is another way. You can go back to the money lender, negotiate for more terms. You can pay, for example, you can pay for like interest only until you get back to your stableness or financial stability, and start paying the interest or the principal. Mortgage finance is a good financing model of buying property or houses or homes. You use little money to buy bigger properties. For example, when you are buying a property of 1 million, of 100 million, you always use, or the money lender will ask you to put down at least 20 to 30 million, whereby 30 million will be 30% of the amount. Then they give you 70%. You see, you have a property which is worth 100 million when you have used 30 million from your pocket. Then you finance it, and it is a good, when you do your math properly and you buy a cash flowing asset or a cash flowing property, or rentals, let us call it rentals. You buy rentals, where people will rent and pay you money monthly. You can use that the monthly payments from the tenants to finance the mortgage or to finance the loan the bank has given you. And you can also keep or part with some money when you do your mass property on the mortgage financing. When I buy a property with mortgage financing and get tenants paying the mortgage, at the end of the period, the tenants have paid for you the mortgage, and you own the house, and you have been receiving extra income in your pocket. How is it? So why not embrace the mortgage financing? Because now mortgage financing is being implemented by some financial banks, local money lenders. So come on, use the mortgage financing as a model or a tool to own real estate. If you can start small, start with one property. After a certain period, get momentum, go on to own more properties, become financially free. Real estate brings financial freedom. For example, you're earning money from real estate properties. They are there, they are fixed. You're not working. You're not putting in work. You're receiving passive income. That's why we are here. We are bringing you or making you aware of how you can become financially free. So don't forget to like and share. If the information is good, share to your friends, share to your group. Then the link or you can comment in the comments below, or direct message us, or subscribe to our YouTube channels. Thank you for watching.